Marco, we'll start with a very simple academic session today. Let's make it more boring today at 5:30, an academic class. What is private market? Please explain. I still don't understand better than anybody else. So please explain as simple possible. What is this private market, which seems to be an excitement for everybody? All things they can access this market with a lot of capital, with limited regulation. I guess that's the excitement. So what is private market?
Thank you. But first of all, great to be here. Thank you for inviting us to be present at this great event. So what is private market? Private market include different sub-asset classes, include private equity, private debt, real estate, and infrastructure. And if you think about private equity, you have within private equity venture capital, growth capital, large buyout transaction. So basically, all these asset class include all companies, all investments which are outside of the public market. Some people call it alternative asset class. Don't know why alternative looks like it's an alternative to something. Some people starting talking about the new traditional asset class to outline the importance of it. But it's everything which is outside of the public.
Marco, let me try to unfold some of this complexity. So when we know that there is VC, there's this private equity, they have significant capital to be allocated to areas which is very early stage or late stage, but it's still quite challenging to people to access private capital. It's not something easy. Is your effort or motive behind this space is to make this capital access easier for startups and founders, or what's your motivation to play in this space?
So our motivation to play in this space is to make this asset class easily available to individual investors, to private investors. Historically, and we talk about the year 20 years when kind of private market started being an important asset class. This has been reserved for institutional investors who invested large amount in something which is complex. And
complex in the sense the asset class itself, the nature of the asset itself.
Yeah, the nature of the asset class, it's illiquid, it's less transparent, it's cumbersome to invest. You cannot go in a stock exchange and buy a stock. And therefore, only institutional investors invested into it. Now, our mission also is to kind of, as I said, facilitate access to individual investors, because we see that more and more of the value creation is now happening in private market. And individual investors are left out because of all this complexity.
And give an example you'll share with us where it's clear that how this institutional investor were able to access this market despite the complexity of product. Given examples. I know you're doing some wealth managers also. You're talking to them to invest in your platform, and they can access this asset. Any examples to illustrate this process?
I think there was a slide there with which I didn't comment on it, but that it really kind of was showing actually the result. What I was saying, that the allocation of institutional investors in this asset class, you see the first 4 column there, is between 10 and 30%. So endowment and foundation 30%, sovereign wealth funds 20%, pension 15%, insurers 10%, and then individual investors less than 3%, less than 5%. And this is related to all these barriers which existed for an individual investors to invest in it. High investment minimum, paper-based, complex investment process, lack of transparency, irregular reporting, lack of education.
In a strange way, is this more capital is something people look out, because from a asset class perspective, it has got less regulation? Is there something attractive about that part of this capital?
No, I would not say that this has been driven by less of regulation. And I'm not saying that this is then the future.
But there's a perception that...
There's probably a perception. And I think here, actually, I would turn it around. I think, regulator play an important role in development of this asset class, to ensure that there is more transparency to ensure that there is more standardization, that you can compare things, and actually also foster education, which is actually the most important thing, to ensure that advisors and clients fully understand what it really means investing in this asset class. Also benefit, diversification, higher performance. That is something different.
So when family offices come to you that I want to invest in this asset class, what advice you give them?
But I would tell them, and not only family office, but everyone. I mean, first of all...
I'll give an example of family.
Yes, an example. So it's, you need to think long-term. You need to allocate a significant portion of the portfolio if you really want to get the benefit of high.
How does the process works? Like if I'm a family, let's say, I don't know that much money, so I'll assume for now I'm a family office holding personal capital. What you will tell me, because this is a very complex process, the asset is not well understood, there's so many uncertainty, but you are in between helping me to navigate. What you will tell me?
I will tell you, and I will lay out a way of building this allocation to this asset class over the next 3 to 5 years.
I see.
I will show you the managers, across the different sub-asset classes, buyout, venture, growth, private debt, real estate, who are the best in these asset classes. Difference in performance in top quartile and low quartile is very high, much more than in public markets. So getting access to the top quartile is really an important driver of performance. So I would help you in getting access to those managers which in the past only raised money from institutional investors.
Well, when I'm just role playing,
yeah.
As a family office, I understand real estate. You show me a portfolio, I understand. If you show me a FinTech company, an underlying asset, what is this company doing? I have no idea.
I will not only show you the FinTech companies, I will show you real industrial companies, mature businesses,
I see,
which are not on the stock exchange. There is less and less listed company around. If we compare to 20 years ago, there is today a third less of listed company. Companies go public, if at all, much later in their life cycle. 20 years ago, after 4 or 5 years, if you were successful, you did an IPO.
Indeed.
Now, you don't need to go public to raise money.
You can stay on private market.
You can stay in private market. And most of the value now is then created there. It's not just tech, not at all. Actually, it's more the contrary. If you look now at the public stock indices, the S&P, 30% of the S&P is technology.
Yep.
And worse than that is 7 companies.
Yes.
That's not the real economy. The real economy is really built in private market.
And but
that's a misconception. People think private market, it's high risk and it's tech.
Because the perception is that you would have invested on product which is, I don't understand. I just trust your process so that you are putting the right allocation. Now, from the other side, if I'm a startup, I'm trying to raise money out of a private market. Do you serve that side of the business?
Because we actually sit between the asset manager and the wealth manager, the allocator. We're not a B2C company, we're B2B, so we want to deal with an advisor. But yes, we help more asset manager.
Yes.
We are the GP.
So you don't not necessarily look at the underlying asset value itself. But
Correct.
So you look pure from a return perspective, from a risk management perspective, from an overall portfolio perspective, you look at it.
Yeah.
Now, when I've looked at the number, it has still remained 10% of world capital. I don't know what's the current percentage, like $13 trillion, the private capital now?
Private capital, the total wealth on the planet, 110 trillion.
100, yeah, but out of that, on the private...
less than 3%.
Less than 3%.
Yeah.
And why it has still remained so small? Why is it not growing?
It is so small, let's start with that. It's still so small because of all these barriers which existed, which I mentioned a few ones before. This is an asset class where historically the minimum to invest was very high, 5 to 10 million into a private equity fund. The process to invest was very cumbersome, very paper-based. Lack of standardization, lack of intransparency reporting, lots of lack of education. All those barriers kind of were there, make it difficult for an individual investor to really get access. And now what is there now, it's a combination of let's say, three things, which I think we are an inflection point, and that number, 5, 10 years from now, will be different, will be similar to the allocation of institutional investors. And that's technology. Technology is really there to take out all those barriers and really make it easier for investors.
Because Saranjit introduced you as a FinTech in the space. So explain the technology you're deploying to make it easier.
Yeah.
Just go through a simplified tech stack.
Yeah.
So that we all understand.
So think about, from the very beginning, and you make the example of before you want to invest, you come to us. So first you need to learn about the space.
Is it self-service? I need to talk to somebody.
No, you need to talk to somebody. You will talk to your banker.
Okay.
The banker will have access to our value proposition.
So the banker will refer
your advice.
Okay.
Yeah.
Okay.
Exactly. Because many banks now use our platform.
Okay.
Many advisors use our platform. So they will get access to what we call our marketplace, and they will learn about all the different strategies of the different managers who over more than 250 asset managers. So you learn about it. You can then do due diligence, because we have done due diligence.
So when you say I can do, means what? There's a technology I can touch which will do that due diligence?
Yes. You go into a site,
okay.
and a website or a digital profile of the various funds. You can look at their pitch book. You can look at the diligence report that
I see. That's what you meant by I can do it myself.
Yes, you can really do it. Yeah. And after you learned and you have decided to invest, you invest. But there is no paper-based subscription documents. And for the people who have invested in private equity in the past, I think you realize that it's not like buying a stock on the stock exchange.
Indeed.
It's a very thick document that you need to fill, and it's quite complex. All that process is digitized.
In your product.
Yeah. So you can really kind of invest, and then you are invested. And then that's actually where the interesting also part starts, because usually those are long-term illiquid product or semi-liquid product. The importance of reporting, the importance of transparency, the importance of knowing where to go to get the report, to get the tax information that you need for your tax statement. So all that is automated. Yes.
Fantastic. What else? What not automated yet? Looks like you've automated the whole process other than meeting you. Anything else you do allow?
Well, look, there is a lot of, I think there are different parties involved in what I call the ecosystem. There is, the interaction between you as a client and your advisors. And then there is and that's all automated and digitized. And that's what's most important for you as an underlying client.
Yes.
But then what happened between the bank and the asset manager, it's not just one street. There are many parties in the ecosystem, the custodian bank, the administrator, the transfer agents. All that work is still very manual, and we are helping in digitize
the whole custody, housekeeping, everything.
What you don't see, but that's actually where
it's part of
most of our work goes.
I see. Now, given I'm a regulator, I would ask, are we a barrier to your grand ideas?
Are you?
A barrier to your platform or some kind of structure?
No. The regulator is also an enabler.
So how do we enable you? What kind of regulatory role we play in this whole market?
I think on one end, there is a contribution that the regulator can have in helping in eliminating those barriers. When I was talking before about creating that the industry has no standard, that would come from the tangle, creating more standardization. Two, think about education, ensuring, because it's about suitability of those products. We need to ensure that we make it easy for investors to invest, but then we need to make sure that only the suitable investor get access to it. So the role of education within the wealth manager organization, distributor, is very important. And then obviously there is the regulation about, deciding, what kind of structure, what kind of criteria a private person need to have in order to invest.
This is the risk, my suitability.
That's the suitability. Yeah.
Suitability checks.
So it's not really for everyone.
Yes.
People talk about democratization of the asset class. It's not really for everyone.
Yeah. But you have made it easier to remove the barrier of the processes which was earlier there to get invested in this asset class. That you removed. But as an asset class, I will have my own suitability checked by the bank before I can invest in your asset.
Yes.
And that process of suitability check, you do assist the banks.
Yes. Yeah. But that's very important. That's actually why we are not a B2C business, and we're kind of B2B.
Banks do the suitability for them.
Yeah.
Now let's look at, just a couple of minutes. Now, anything for Japan market, what brings you here? You just told me you have a new office here, or you just opened an office here?
Yes.
Why you open an office in Japan? Japan is like friend with capital. There's iCapital, J Capital.
So, a little bit of our history. Our firm is 10 years old. We're founded in New York. And then 3 years ago, we kind of started going global. So we already opened, 7 various offices across Europe and across Asia. Yes, we are opening an office in Japan. And Japan is important.
Is it because Japanese investors are still staying away from private market, or is that the reason you want to come here and make it easier for them?
Yes. Yeah, but also the size of the market, is one of the largest economy. It's one of the wealthiest country. Yeah. And the location, if we would put Japan, then it's even, it's really close to zero.
So which market has a maximum allocation in the private investment, you would say?
The US. Yes.
Japan, with all the liquidity, they're not big. No.
Very low. Like Europe is very low as well. It's not that Japan is alone.
Oh, and that's the opportunity you see.
Yes.
Now, we are in Singapore as a Japan FinTech Festival, and you are part of Singapore FinTech Festival. I know you have been championing very hard to make the market transparent, especially private market. Is there something you expect next 2 to 3 years to happen in this space? What is your expectation as a senior manager in your firm? What do you expect market to do?
I think we are observing this structural change between public market and private market.
Sure.
We're at the very, very, very beginning. There is still a lot of misconception about this asset class, which is very much associated to.
So is it risky? It is
risky.
Lacks liquid.
Yeah.
Is it liquid?
The liquid
can't exit.
Exactly.
Before I didn't touch that topic.
Yeah.
Is it hard to exit in the market?
Look, most of those products are actually self-liquidating product, and the illiquidity is the reason of the outperformance. So that's why the importance of education is very important. There is a reason why certain things are illiquid.
Yep.
But you get your money back.
I think that's the holy grail.
Yeah.
To invest in private market and exit efficiently.
As an investor, you make a decision to invest.
Yes.
You don't need to decide to exit.
Yes.
The manager will do it for you.
Fantastic. With that optimism, I'm sure more Japanese capital will come to this sector, and you'll be very happy man here. Thank you for joining us.
Thank you very much. Thank you. Thank you all.